gold is taking on a very relevant role in much of the world. And when all of these nations have for a very long time allowed and or promoted gold ownership, for the center of free trade to do that, the world reserve currency for the United States to do that, it would be game over. Less than 4 weeks away from the BRICS meeting in Kazan, and 2 weeks after that is the biggest election in our history, maybe one of the two anyway. And you know, I'm sure there's no coincidence that they've been buying gold at record pace. Look at the evidence: weaponization, inflation, and a new settlement currency pegged to gold. I mean, and what is gold but the only other tier one asset in the world?
The management of gold reserves has become increasingly significant in today's complex geopolitical and financial landscape. In 2023, central banks acquired a total of 1,037 tons of gold, marking the second highest annual purchase in history, just behind the record 1,082 tons bought in 2022. In light of these unprecedented figures, gold remains a preferred reserve asset for central banks. The 2024 Central Bank Gold Reserve Survey, conducted from February 19th to April 30th, 2024, gathered responses from 70 central banks. Notably, 29% of these respondents indicated plans to increase their gold reserves over the next 12 months, representing the highest intention level recorded since the survey's inception in 2018. Andy Schectman, CEO of Miles Franklin Precious Metals, highlights the significant role gold is playing in many nations, especially as governments worldwide have historically promoted gold ownership. He advised investing in gold and silver, which are taking steps to safeguard themselves against the mismanagement of U.S. monetary policy and the fiscal irresponsibility of the government. In markets such as the U.S., there is growing concern about the state of the job market. The Federal Reserve's larger-than-expected half-point rate cut last week highlights a shift in focus towards slowing employment figures, with more cuts anticipated before year-end. Meanwhile, the rapidly increasing U.S. debt is weakening the dollar, raising concerns about its stability. With many countries seeking alternatives to the U.S. dollar, its global dominance may soon be in jeopardy. Schectman warns of a potential turning point for the U.S. dollar's status as the world's reserve currency. He expresses hope that cooler, more rational heads will prevail, particularly in managing global geopolitical tensions, such as the situation in Israel. Despite these uncertainties, Schectman advises individuals to continue accumulating precious metals and remain vigilant as they prepare for potential challenges ahead. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
Listen to this show, to the people who listen to me, to the people who buy gold and silver, are exactly that. They're doing what they can to protect themselves against the mismanagement of our monetary policy or for the fiscal irresponsibility of the U.S. government. And yet you have the idiocy of our leaders who try and blame greedy grocery store owners for price gouging when it's the increase in the money supply and the greedy government creating so much money to the tune of $1 trillion every 90 days, or roughly $100,000 a second, 24/7. That is creating the problem. And I would like to hope that cooler heads, smarter heads prevail in Israel. I would like to think that that's not coming here. I actually was talking to my dad about it today, and he says, maybe, we should, rekindle our relationships that we have with entities in Singapore and Switzerland. I said, well, we're very good friends with the people in Switzerland. We could call the people in Singapore and rekindle those relationships. We don't do much with them anymore. But what good does that do? If they make it illegal, they make it illegal. And the same thing is true with Bitcoin. I was talking to someone today, and he says, well, it still would just make Bitcoin go to the moon. I'm like, well, no, it really wouldn't, because again, you can hide in Bitcoin, yeah, until you come back out. Until you come back out into the currency of the realm. And the same thing is true, I said with my dad. I said, look, if it comes down to eminent domain, well, you end up trading your gold in for as fair of a price as you can hope to get. I don't know what else to say other than to say it's always been a possibility. I don't think it will happen. I'm shocked it's even being brought up in Israel, but gold is taking on a very relevant role in much of the world. And when all of these nations have for a very long time allowed and or promoted gold ownership, for the center of free trade to do that, the world reserve currency for the United States to do that, it would be game over. And that's why I've always thought that the way for the United States to do this and have their cake and eat it too would be to confiscate the ETFs. And you got JP Morgan and BlackRock being the custodian of SLV, the largest silver stockpile in the world, company that paid a $920 million penalty, the largest the Justice Department ever handed out for manipulating the market. And they're allowed to be the custodian of the largest silver trust. And it's HSBC and JP Morgan and others that are behind GLD, the fourth or fifth largest stockpile of gold in the world. So they just simply take those funds on a Friday night without having to face this type of backlash, where they would actually do something as draconian as that. And I would like to think that this doesn't pass in Israel, but look, again, desperate governments do desperate things. And this country hasn't witnessed desperation yet because we still have people foolish enough to buy our duration treasuries. And at least it's Ireland and the United Kingdom and Cayman Islands. But desperation can breed these types of edicts. And it gives you privacy. You're outside the matrix, but there are no guarantees. There truly aren't. And I think you have to prepare the best you can and hope for the best. And that's pretty much all we can truly do. And I think that's the most honest answer I can give. Look, if that happens, I'm going to be the person more bummed out than anybody. So let's hope it doesn't, and let's just not let it deter us from continuing to accumulate and do the best we can to get the hell out of the way of what's coming. But it's coming, and that I can tell you. These type of actions only explain that even more.
Expectations of another 50 basis point rate, cut by the Federal Reserve in November, are weighing on the USD, providing support for gold. Geopolitical tensions are also driving demand for the metal, especially ahead of key speeches by influential FOMC members. The US dollar is struggling to maintain Wednesday's strong recovery as dovish Fed expectations persist, which continues to bolster the non-yielding gold price. Schectman emphasizes that this resurgence in gold demand coincides with Federal Reserve Chairman Jerome Powell's recent pivot by 50 basis points, despite the Fed's prior claims of a strong economy and robust labor market. Schectman also discusses how the American public has largely been asleep to the risks, but if we see even a modest increase in participation in precious metals investments, now let's redirect our attention to a video.
In terms of gold holding up, it's held up in the face of positive real yield for the past 2-3 years. It's held up, or 2 years anyway. It's held up in the face of a strong dollar, and it's held up in the face of declining ETF outflows, as we've seen, like you're skiing down the Swiss Alps in terms of outflows. And now we're seeing the ETFs just start to pick up again, which is for the first time in 2 years. You're seeing reports like on Goldman Sachs that their trading desk is being inundated with gold requests, and the ETFs are starting to pick up. At the same time, we're seeing Powell pivot by 50 basis points. And they've been touting all along such a great economy and strong labor market. We know that's a lie with the revision of over 1 million jobs between the 200 or 300 they revised during the year and the 818,000 they revised after the year. We understand that it's a lie when they tell us that the CPI is 3.3% or whatnot, and John Williams tells us it's much more. And so pivoting in the face of all of these lies, when they tell us that they feel confident that they've reined in inflation, yet they're 65% away from their target of 2%. It's a lie. And yet it, to me, speaks to the fact that they're very concerned. Now, as far as gold, we've had outflows on the ETFs. We've had a positive real yield. We've had a strong dollar, and we've had massive central bank buying. Now, all of a sudden, you have ETFs moving up, and you have yields moving down, and you have a realization by the world that all is not well. And I say that to you because immediately after he lowered the rates by 50 basis points, the bond market, the back end of it, sold off, meaning rates went higher, because the world is saying, at what point do we get tired of a country that's going as deeply into debt as you are, with all of the other issues that we've talked about ad nauseum, and at the same time, you now have the hubris to actually lower rates. They should have never lowered rates. They should have continued to raise rates. They've never even squashed the inflation bug, which is only going to get worse and worse and worse. Now, you look at that in terms of the price of precious metals, that hasn't even been fully priced into the equation yet, as far as I'm concerned. The American public has been largely asleep at the switch. And if we see a broad participation increase, as we've talked about forever, the 0.5%, if it increases to 2 or 3 or 4%, as paltry as that sounds, represents a substantial increase in demand. I don't think that the markets have even begun to price in things such as the rolling out of a BRICS settlement currency, such as the American participation. And, there's an article that I just read by what's his name? Kuz Jansen, I think it is, and he was talking about how all the BRICS nations countries are accumulating lots of gold in those that are tied to Project Enbridge. Well, no doubt, and we've talked about why they've all been bringing it back and why they've all been buying. We find Saudi Arabia, who's straddling the line here, accumulating 160 tons of gold. Well, who cares, right? Well, the people care because they didn't report it through the normal chains like through the IMF, and instead it was the Swiss import-export numbers that flagged it. They're straddling the line. They've become full participants in Enbridge, but kind of hedging about their full participation in BRICS. They don't want to upset the apple cart, but the apple cart is going to turn upside down.
The rush for gold continues to intensify, with the precious metal reaching another all-time high this week. Recent gains are attributed to ongoing economic uncertainty, geopolitical tensions, and robust demand from central banks globally. Analysts highlight that gold often sees increased interest during times of instability, driven by concerns over inflation and the strength of the US dollar, prompting many to seek safer alternatives for their investments. Gold similarly surged during the early days of the COVID-19 pandemic, reflecting its role as a hedge in uncertain times. As BRICS nations challenge US dollar dominance, the world faces a crossroads. Gold, once again, emerges as a potential savior. Will the US embrace this precious metal to maintain its influence? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.